Embedded finance is a huge opportunity. It's in alignment with the platformification. The competition is fierce, and who knows who will be able to grab most market share. For me, openness is really an invisible force. So it's time to innovate at that level.
Today, our guest is Dr. Efi Pylarinou, one of the world's top thought fintech leaders, global tech influencer, experienced Wall Street professional, and prolific content creator. Efi, good afternoon, and thank you for being here.
Good afternoon, Dennis. It's great to connect with you.
Today, we are going to talk about embedded finance, open banking, and different use cases of advanced technologies in finance. According to Refinitiv Global Social Media 2019, you are ranked third in the world among influential people in the financial sector and first among women. Why are there so few women involved in this area, and how to attract more women to fintech?
Dennis, that's a great question, and I have to say that blame it on the ancestors. I mean, think of it. Finance and technology are both sectors that have been traditionally dominated by men. So what do you expect from fintech? I'm really, disappointed when I look at the amount of capital from VCs that goes into female-funded fintechs, or even fintechs that are founded by balanced in terms of gender diversity teams. Capital flows are in the single digits. So nothing has really changed. I mean, if we're strict, there's been a bit of progress, but still we have a long way to go. And we have to be intentional about bringing women into fintech. Fintech is really behind any economic activity, and it has to represent what is happening in the real economy and in society. 50% women. We have to get to that balanced stage. And from my point of view, I'll give you an example. I've been intentional this year in terms of interviewing women, more women, on my channel, Conversation and Insights. And I'm happy to report that to date, I've interviewed 60% women, amazing women in all sorts of sectors and expertise, passionate about sustainability, crypto, the metaverse, digital banking and AI, just the whole spectrum. Again, I'm intentional also about picking to work with women in my collaborations, give them priority. Why? Because it's a more holistic experience with them. It's not only about getting things done, getting tasks done. It's really very energizing. So again, intentional is the way to go.
Let me remind you, my name is Denis Astapchenia. I'm head of financial technologies at Andersen RnD company. Our research and development department works on the content for this channel and also collects the best practices of fintech software development. You can view the examples of such case studies on our website. The link is in the video description. If you need to go digital, cut operational costs, or automate your business processes, we will offer the best possible solution for a business case. Contact us. The current economic fluctuations caused by the global political situation not only create problems, but also open up opportunities. How has this situation affected fintech, and which technologies should we turn to in order to tame uncertainty?
Well, of course, fintech has been affected by this complex downturn. And we see it in many different ways. First of all, we've already had massive layoffs in the fintech industry, some of them in the order of 10%, maybe even 25%. in sectors, subsectors that are hard hit, like buy now, pay later. Overall, I would say that the sector, as an employer, the fintech sector probably is down 10%. I'm thinking of the numbers that the Center for Financial Technology and Entrepreneurship, CFTE, reported in a brilliant report last year. That number was around 300,000 employees globally in the fintech sector. Again, I would estimate that now we are down about 10%. The other factor and KPI that the fintech sector has been visibly sort of been hit is in terms of the capitalization, in terms of the valuations. If we just look at the publicly traded fintechs, they're down in the range of 50%, 60%, maybe even 70%. I mean, I'm talking about fintechs that have been successful, like Square, now named Block, or PayPal. So the market capitalization talks how painful this downturn has been. Even in the private sector, a lot of fintechs that need to go to capital markets, their valuations are also down. Again, the buy now, pay later sector has been hard hit, with the example of Klarna having to raise capital around, I think, 800 million recently, and their valuation was down 80%. That is 80. That is detrimental. Even Stripe, a very successful fintech that is still private and that hasn't needed to go to capital markets, they alone lowered their valuation by 30%. So we get the picture. Things are difficult in terms of market valuation. On the other hand, I think that what we're going to see here is deploying technology to serve the needs in this macroeconomic environment. And we're going to have an increasingly larger part of the population being financially fragile. So we will have to innovate to serve those needs. And I would say that we'll probably see more funding and more focus in subverticals that are more recession-proof, like lease to own, or maybe subscription type of models where they bundle services so that the end customer, be it retail or business, really pays for what they need. So that's really how I see this downturn. It's an opportunity to innovate because, as we all know, necessity is the mother of invention. And I foresee that artificial intelligence is going to be a technology really at the core of this phase of growth of fintech.
So, embedded finance. Efi, you consider embedded finance as one of the main trends, not hype at an early stage of experiments. How do you understand this term, and what is the reason for the rise of it, and will it really solve problems?
Well, embedded finance is all about integrating financial services into businesses, at their website, mobile app, or their processes. And what is really exciting about embedded finance is that it is linking the real economy with financial services. So we're talking about embedding financial services in non-financial businesses like restaurant businesses, the mobility sector, e-commerce. So this is really an innovation. And it's both serving and benefiting the end customer, but also the provider, the merchant. So it's a win-win situation. And I think that it's also very much in alignment with this trend of creating ecosystems through these partnerships between the financial providers and these non-financial, customers. If you want to think of travel industry and again cars and restaurants, creating payment experiences. If we're talking about embedded payments, that is, I would say, the largest sector. And from the customer's point of view, it's a seamless experience. And from the merchant's point of view, it's got a lot of benefits. First of all, it increases the possibility of the long-term value or the lifetime of the customer. So more engagement expected from the customer, increased revenues, cross-selling opportunities, and needless to say that the merchant has access to data and data insights that they did not have before through these transactions or attempts and behaviors. All this data is very valuable. When I think of embedded finance, I think of it as what has led to the growth of banking as a service. That is a big, I would call it a sub-vertical of embedded finance. It's powering embedded finance. So here we have banks and fintechs providing banking services to non-financials. And this is estimated to be a huge business. Cornerstone Advisors estimates annual revenues of 25 billion, roughly, in the next couple of years, just from banking as a service providers. We're even seeing traditional banks, especially in the US, jumping into this business and understanding that this is not, oh, we are dumb pipes. It is actually a valuable service. They realized that, especially during the lockdowns during COVID, where e-commerce and digital behavior, contactless payments, and changing the digital engagement of large parts of the population became, suddenly a norm. Andreessen Horowitz estimates that embedded finance, broadly speaking, we're talking embedded credit, lending, payroll, and so on, is a huge business in the order of 7 trillion. So overall, I would say that embedded finance is a huge opportunity. It's in alignment with the platformification of the economy, really. Financial services are behind the real economy. And APIs are obviously the key, the connector that is enabling all this. And APIs is nothing new, as you know, Denis, but the use the way we can use APIs to create innovative experiences, that is what is new. And again, we have the opportunity to create experiences that combine payments and marketing, combine payments and sales funnels, and we'll have the opportunity to innovate further and create innovative processes at the supply chain or the logistic layer. Again, embedded finance is a huge opportunity.
So what examples of successful implementation of various types of embedded finance from different regions can you share?
I mean, I think buy now, pay later is a great example of really combining marketing and payments. And if you think of Klarna, it's really empowering the merchants that are on its marketplace with marketing tools, loyalty programs, and so on. That's an innovation. If we look to Zip, which is an Australian buy now, pay later company, and they have embedded insurance in their products, and especially for large items. There's an example of embedded insurance in e-commerce. I would say the classic example of the big ride-hailing companies like Uber and Lyft. Lyft is a great example that has empowered its drivers within its app to manage their financial lives. So they have a debit card, they can access immediately their earnings, they have savings accounts and so on, all within that app. This is just embedded finance for cash flow management of financial lives is ever more important. And again, we'll realize it more now in this tough macroeconomic environment. If we look in India, WhatsApp, you know, the messaging app of Meta, they have integrated payments. And now their 60 million users there will be able to do payments, peer-to-peer payments. That's a huge use case of embedded finance. All over the world, you know, we see that creating contextual experiences for customers is super important. If we look in Asia, where the super app model has, you know, been born, and we Westerners admire it, of course. We can look at Grab, for example, out of Singapore and growing in Southeast Asia. They have embedded investments through Grab Invest on top of payments and credit and so on. So you see these examples are, you know, there's a full range from payments to investments to credit to insurance.
So let's talk about open banking. 86% of banks are going to use open APIs. What are your thoughts on open banking regulation and Europe's leadership? And what is happening around the world in open banking today?
As you said, Denis, Europe has been a leader with their Ph.D. 2 regulation, and they've been continuously in the forefront. They are planning by 2024 to implement the open finance, you know, going beyond open banking, a regulation that will, you know, go into mortgages and further. And, you know, these regulations have two major benefits. One, for the incumbents, it's a way for them to innovate, experiment in a compliant way. And from the innovator's perspective, it allows them to really build platforms in a way that is scalable because of the availability of these APIs. Now, the competition is fierce, and who knows who will be able to grab most market share from this open finance, if you want, trend. What is interesting to recognize is that there's the open banking, open finance regulation, and countries across the world have realized that this is beneficial for their economies. So each of them are at different stages in terms of implementing open banking regulation. For example, Brazil has been ahead. They've implemented open banking to their benefit. There are other countries like the US and the United Arab Emirates that are still in consultation and review mode. India last year made strides in terms of their open banking regulation, and they're seeing the benefits. Those benefits are in combination with the infrastructure that they have built, at the heart being their national digital identity infrastructure, and UPI, the Unified Payments Infrastructure, also being a public-private-led initiative that has allowed them to bring forward their people, 1.5 billion people, 1.4 billion people, to the digital economy, and they're building a very important fintech ecosystem. What I would say is that there's a distinction between the regulation and what is market-driven. And even though in the US, for example, the open banking regulation is behind, the market-driven open banking regulation has grown. You see companies like Plaid, for example, which really is a company that is designing these connectors, APIs, connectors for everything. It's really powering open finance and enabling, 6,000 fintechs, thousands of institutions to get into open banking, and it's done without the regulatory framework. So we're seeing, these forces from the market, but also regulation catching up. I would say that the only part of the world where there isn't an open banking regulatory framework is China. However, they have forced their two big tech techfin providers, Tencent and Alibaba, to open up the walls of their relatively closed super apps. So again, we're seeing the market force of openness, invisible as it is, really shaping the market forces and the business models that are enabled always to serve better the underserved.
In your speeches and articles, you spoke about openness as a Greek goddess. Why do you consider this feature special? How can open API technology change the world of traditional banking?
For me, openness is really an invisible force that's transforming the economic activities. And it goes beyond just open banking and the regulation and so on. And I do insist in this, thinking of openness as a goddess, because this conveys the message that she is powerful, and you should be afraid of her powers, and you should actually try to befriend her, maybe make offerings to her. She is in charge, and that should be clear. Whether she's operating in fintech land or blockchain for finance land or big tech land or traditional financial services sector, she is there. Do not, think that she is gone. Look, in the US, we have already seen her way of operating with this market-driven openness that I alluded to before with Plaid. Think of Plaid as a factory of connectors. If you like to think of Legoland, then Plaid is producing the connectors for you to build, and it's open to you to build whatever structure you want, always to serve needs of underserved, to overcome the frictions of the existing system. I mean, at the payment level, we have a lot of these frictions. Think of, cross-border issues. And again, API technology is not new, but it can solve problems in completely new ways. I never forget the memo that Jeff Bezos put out back in 2002, that's 20 years ago. He instructed Amazon employees at the time that they should communicate strictly and only through these digital interfaces, APIs. And if they don't do that, they will be fired. This is a famous memo of Bezos that every financial services provider should have hanging on their wall, be it, even as the wallpaper on their digital gadgets, and never forget, because it is about the API-fication internally and in such a manner that you can communicate with the external world and build ecosystems and platforms. At the end of the day, Denis, we do have the technical abilities right now to build profitable businesses and sustainable businesses through these modular ways. What we are lacking is probably the human intention and the culture to make this happen. We all know that it's one thing to deal with the technical debt, but in combination, we have to deal with the human debt to make this happen. And the message for me is clear. You need to invest dollars and time. You need to think along the lines of open ecosystems, and API-fication is the way to go. And it is what openness, the Greek goddess, is telling everybody and guiding everybody. So befriend her and be guided by her.
What innovative business models in the financial services sector have proved successful worldwide over a decade of intensive innovation and financing?
I mean, there's a couple that we admire, especially in the West. The first one that comes to mind is the Asian, Chinese, and Southeast Asia innovation, the super app business model. The second one is from India. It's at the infrastructure level, the intelligent design that combines the digital identity at the heart and the unified payment initiative, and it's around financial inclusion. The third one is from Africa and Southeast Asia, the successful way of delivering financial services from telecommunication companies, mobile money, think M-Pesa, and so on. And the last one that's proving now to be successful in the West, in the developed world, is this open banking, open finance, and embedded finance business model. So if we look into the super app model, by the way, a term that was not even coined where the model was born, it was coined in the West. I believe that the founder of BlackBerry coined the super app term, and it's been successful no matter how you look at it in terms of monthly active users, in terms of volumes of transactions, just bringing up a huge economy like China, huge population of 1.5 billion into the digital world and empowering them like you would empower a whole sort of community of ants, no wonder why the logo of ant is what it is. It's about empowering the small guy and empowering at scale. And then in India, also how you bring another huge population, rural and not digitally enabled, into the contemporary digital economy. And there it is done through these two main infrastructure, the combination of those. Africa, as I said, M-Pesa started really a revolution 15 years ago with mobile money, and today in Africa we have a hugely competitive mobile money sector with many players, and that is a proof of success. And the proof of success of open finance here in the West is really the growth of API ecosystems and fintech services that are built on this, leveraging this technology and offering financial services in contextually innovative ways.
So we recently interviewed Paolo Cerroni, and his latest book is devoted to the theory of platforms. What is the difference between digital platforms and ecosystems in the financial services sector from your point of view? And do you think that the platform economy is our future?
For me, the best way to understand these differences is through an example. One of my favorites is Square, nowadays named Block, that was founded by Jack Dorsey and Jim McClavey back in 2008 or 9, I think. So we're talking about a fintech that is now publicly traded, over 10 years old. And if you look at what they have today, they have a dual ecosystem. One is for retail, Cash App in the US, and then the other one is for sellers, for merchants. And when they started really by providing this Square dongle that you could attach to your phone, and sellers could pay and receive payments. So that in itself was just a regular, what we call linear business. No platform, no ecosystem. Fast forward to today, and Square offers a whole a suite of services to its sellers. Sellers can within the Square ecosystem, they can process their taxes, their reports, their marketing, any needs, any business needs they have, they are served within the Square ecosystem. And that is done either through building in-house technology or partnering. But even when they're partnering, the seller accesses the partner within the Square ecosystem. So the integration is seamless from the customer's point of view. Square has even integrated the seller part with the retail part, with Cash App. And they continue to build what I would call the complexity of this ecosystem. So Square Block is a great example of a dual ecosystem with greater complexity. Now, juxtapose that to Venmo, which is a peer-to-peer app like Cash App, and it's part of the PayPal family, but it is not integrated seamlessly with PayPal. So if somebody in the US logs in and uses Venmo, they cannot seamlessly access all the services of PayPal. So therefore, that is not an ecosystem. I hope that makes it pretty clear. And as an example of a platform, I would say that the best example is the peer-to-peer lending businesses. Those are platforms that what they do, their business, is to bring together borrowers and lenders to transact. They facilitate the transaction. They are not platform-based ecosystems because they don't offer services to the borrower around, let's say, if you're borrowing because you want to buy a car, they're not facilitating all the services around, this, like owning a car or running a car and so on. So that's the difference. I like to think of platform-based ecosystems as orchestrators of value creation and looking how to create like an operating system for a specific business. We're talking about businesses, or a specific goal if we're talking about the financial lives of people. And what has become clear is that public markets and private markets have been rewarding companies that are platforms or platform-based ecosystems with higher valuations. Why? Because they have proved that they can be twice as profitable with half the employees, that they can grow faster. And actually, this is a success that is not only in financial services, but in other sectors too. So I would say that the platform-based ecosystem model, as Paolo Cironi, describes and preaches in his book, is very successful and will continue to be successful in financial services. It has been proven in other sectors, and it's time to see it implemented in financial services, even though we have always been hiding behind the excuse, oh, we are different because we are regulated because of this and that. We're no different. We're in the digital economy. We are here to orchestrate partnerships and create value to serve the end customer, be it retail or business.
Let's go deeper into innovations. Efi, you've seen a lot of innovations in customer service and fintech. Could you share with us the latest successful examples that are worth looking up to?
I mean, in consumer banking, we are now at a stage post-COVID where contactless payments, peer-to-peer, instant payments, 24/7, low-cost exchange rate transactions, remittances, trading, they are pretty much, I would say, standard and expected by most customers. I would say that one of the biggest innovations, successful innovations that continue to unlock value for at the customer experience level are mobile wallets. And there's different kinds across the world. If you think mobile wallets are not just a digital version of my physical wallet in my handbag, what a mobile wallet offers is really beyond what was possible before. From the merchant's perspective, mobile wallets enables them to create value to customers through offers. The offers, the loyalty programs, the contextual experience is just amazing, the breadth. They have location-specific capabilities. So if I'm traveling, to guide me with offers and considerations, they can be specific to my preferences and very timely and customized in terms of offering choices to pay. A mobile wallet goes beyond payments. It can hold tickets, for traveling, tickets for events, be it in the entertainment sector, be it in business. It can hold invoices and receipts for individuals, but also for merchants. It goes beyond that to the point that it can hold identity. Think of Apple in the US that recognizes a driver's license as a legal identity. It's in the wallet. So the wallet has become really a very powerful, I would say, digital innovation that is very essential for the innovative customer experiences that are being created and continue to be created as we speak. The other big innovation is around using artificial intelligence. And here we have multiple innovations. It can be around investing, think ESG investing, think predictive analytics, and empowering and democratizing and enabling access to services or investments that were exclusive to high net worth or only corporate and institutional investors before. So we have really opened up access to tools and opportunities that did not exist before. I would say those two for me are really the big ones in terms of customer experience.
Where, in your opinion, will innovations in financial services develop most actively?
In my opinion, the disruptive activity is going to happen at the infrastructure level. It's kind of not so visible, but there's a lot of building happening as we speak. And think of it, most of what has been built today in fintech is on the old infrastructure level. It's on the old rails. think of, payments. Payments are running on the old rails. SWIFT, which is a network with 11,000 institutions in over 200 countries. This is powerful network for processing payments, but it is an archaic messaging system. And it is actually the reason that the two large card networks, Visa and MasterCard, are a duopoly, because they solve problems in the frictions in the payment system that exist. And at the cross-border level, even more. And if you think of it, again, fintech, for the most part, is built on the old rails. So it's time to innovate at that level. And there is competition out there. There is competition to change. Look at what is happening with CBDCs. How many countries are interested in researching the possibilities and changing the way money moves around the world. Why? Because of blockchain and distributed ledger technology, which is disruptive at the infrastructure level. It's no wonder we have, for example, NASDAQ or DTCC also very much researching and launching side projects that are distributed ledger powered. Why? Because they see that the disruption is big at the infrastructure layer, be it payments or settlement of equities, for example, for DTCC. The other very important disruption and where a lot of activity is happening is in fintech, we are in a rebundling phase. And in this rebundling, there's a lot of innovation happening. I think there at the integrating, payment layer, we will see more innovation, and we will innovate and integrate logistics and supply chains and really integrate with the real economy. Why is this important? Because at the end of the day, finance is serving real economic activity. It's not in itself an end proposition. This, however, requires investments and capabilities in terms of data flows, connecting the real economy with the digital economy and what enables it. So these are the powerful two, I think, very active areas, if you want, and there's a lot of building that we will see it fruition in the next 2 or 3 years.
Payments are complicated, especially cross-border ones, and you already mentioned CBDC as a solution. So does it have the potential for a more seamless cross-border flow of money?
I mean, look, CBDCs from a technological standpoint, they could definitely reduce the cost of cross-border flows and improve efficiencies around compliance and anti-money laundering and so on. However, so much depends on other factors in terms of the success of CBDC, because think of it, the success of a CBDC within a country or cross-border is all about the last mile of its adoption. It's also about the regulatory framework, the policies for cross-border movement of money, be it CBDCs or fiat, and the geopolitics. I mean, when I look at existing CBDCs, the ones that are already live, and I take the example of the Bahamas sand dollar, it's already 2 years old. It's been live for 2 years. But last year, they had to partner with MasterCard to help them in this last mile. So forget about cross-border. Adoption domestically has not happened. So adoption takes time. The last mile takes time. And if I think, let's say, 5 years down the road, let's assume that we have 20 live CBDC projects. Right now we have 5, and most of them are in small countries. We need to build the infrastructure so to enable the interoperability between these CBDCs. Who's going to build that? I don't know the answer, but will it be Visa and MasterCard again that are already building and launching infrastructure for the private stablecoins like USDC? As a service, they already offer it. So these are the questions that are, challenges in terms of the success for cross-border payments with CBDCs. And let's not forget that, China, which is ahead of everybody in terms of their CBDC, the digital yuan, ECNY, and they're already testing and piloting cross-border with Hong Kong and maybe, Southeast Asia. But geopolitics, I can't see that there's going to be easy interoperability with the developed world. So again, there's a lot of factors that will determine the success or the value that can be unlocked with CBDCs for cross-border payments.
Efi, thank you very much for sharing your ideas and talking to Andersen.